How are we getting on, people? Luke here from LAGFX. We are back today with another Sunday Sessions video. In today's Sunday Sessions, we are actually joined by a very special guest, Philip. Philip is a good friend of ours from Sydney. He also runs his own Forex group, Opes Trading. What I'm going to do is hand you over to Philip. He is going to give us a complete rundown on Great British Pound USD and hopefully give you guys a good insight onto how he is looking at tackling that market this coming week. If you do go on to enjoy his analysis and his rundown, be sure to check out his socials and his website. All the links will be left in the description. He also runs a Telegram group chat just as LAGFX do, so I will be leaving that in the description as well below. Now, without further ado, I'll pass you over to Philip.
Thank you, Luke, and thanks for having me. It's an absolute pleasure to be on here. For those of you who don't know me, I'm Philip. I run Opes Trading Group down in Sydney, Australia. I've been trading for around 6 or so years, and I mainly specialize in trading the GBP USD, or also known as the cable. So after years of, you could say, trial and error and refining my strategy, I've actually found that it works best on the pound USD. And today I'm just going to do a little top-down analysis and a breakdown on what I see happening on the cable. So firstly, I want to just start from the monthly time frame and point out this key area. Even though it is from 1985, it is still extremely significant to me. And as you can see, it has proven to be significant by actually reacting and acting as an area of support. So if we look at it here, I want to point out a few areas as well. So we have these 2 points right there. And then if we look at that low right there, if we want to say, so these were the lows created from 16 and 2019. And as we can see, this was the COVID hit right here. So this was a massive liquidity grab that grabbed all these orders from below that area and pushed it right back to the top. And as we can see, we came to a significant area once again. And this was an area of, you could say, support and resistance from the past. So if we look at the past, we've got point here, here, right here, here. And as you can see, this point and this point. So it was quite a significant area that we were looking at. The market reacted to it, and we have had that USD strength since pretty much July 21, which has been pushing that pound USD downwards. Now, once again, we can see that liquidity trap or grab happening once again. So from that 1985 point that we had, we can see how the market came and grabbed all these orders below before pushing to the upside. So now what I'm also looking at is, I'll go down to the weekly time frame, and I can see that the market, in terms of market structure, I'll just follow market structure because I believe that's what's going to actually drive the market, and that's how I like to analyze all my analysis, based on just real market structure and what's exactly happening on a chart. So on a weekly time frame, I can see we are in this significantly massive bearish momentum. However, I do recognize this zone right here from that monthly that I just shown you guys. Now, I'll pretty much look at, you could say, we've got these lower highs being created. And now what I see is, I see this right here as quite a significant lower high. So I'm just going to mark out a zone. So I'm going to look at this candle right there, and I'm going to say that we do have quite a significant supply zone lying within. So once we go down onto the daily time frame, also want to mark out, before I do that, we do have this candle right here as quite a significant weekly. So I'm just looking at my zones and wherever I am trading. So wherever the current price is, I'm just going to mark out where my closest zones above and below are. So now once I go to the daily time frame, what I can notice is, I can notice that we are in that zone. So that's from a weekly perspective. Now, if I look at the market structure once again from here, I can see that this point right here gave us that nice big push to the downside. So I can place another, you could say, zones within zones. So I have one in here, and I'll still place, or you could say I'll still use my weekly one to just drag it up to the top. So these have become now my significant areas for me, where I'm looking, if the price is going to push to the downside from this zone, this can be quite significant. And I can also add, in addition to my lower zone, I can add this one here. And I could perhaps add even this one here. So they become my demand zones, you could say. So going into the week, these are the zones I'm looking out for. So moving down into, let's say, the 4-hour time frame, what I want to look at now is how the market has been behaving in that area. So if I just turn on, you could say, my MACD, I'm just looking out for any major divergences, you could say. And if you can notice that we've got a high here, which is right there. We've got the next high here that was created right there. And then we've got the next high here. Now, technically, the MACD should be creating higher highs also. But if we do look at our MACD and we look at these highs, they're actually, yes, they might not be getting lower, but they do remain the same. And now we can see a significant jump up in terms of the price from here to here. However, the MACD didn't. So I'm seeing this as, you could say, the momentum is weakening with every new high that we are creating. So now that we've reached this point right here, and as you can see, we haven't actually created a higher high, I could still say that that divergence is still there. Going into the next week, what I could say I would like to see is perhaps I would like to see maybe a push up above in the start of the week. So we could say Monday or Tuesday, where we're going to grab liquidity that's going to be lying above that point. A lot of short sellers that are going to get into early. They're going to place their shorts, stop losses above. They're going to act as liquidity for the market. So I could pretty much say I would like to see something like this before looking for potential, you could say, shorts down into this area, followed by this area. Now, if the market does want to turn back around to go to the downside, I could say that this is pretty much an area to be looking out for. Why? Because once again, once we go back onto that daily time frame, if we do want to continue this bearish downtrend, well, we are going to create that lower high. Maybe we could even say that we do have some sort of liquidity lying above here that we could tap into before going down. So start of the week, I would like to see these scenarios happening to try and see if I can catch a short. So I'm prepared for that, and then I've got my demand areas from here and from here. However, if the market does want to continue its push to the upside, then I'm also going to be ready, and I'm going to recognize that if this area here is broken, then I'm going to look for this zone right there as the next, you could say, significant area of interest that we could go up into. So I like to always have two biases. I don't like to just be biased to one side, because you got to understand that the market can do whatever it wants at all times, and we have to be prepared for all scenarios, which is pretty much the buy and the sell. So these are all my significant areas. I would say I'm more biased towards the short, so I'd like to see the price push up to then try and short it for the week. However, if it doesn't, I'm also prepared to catch a long if it decides to continue that momentum. So I really hope that this analysis was very informational for you guys. If you have any questions, please feel free to get in touch with me or get in touch with Luke. And once again, thanks for having me on here, and I'll catch you guys next time.
So that is going to conclude Philip's analysis on the Great British Pound to the US dollar pair. I hope you guys have enjoyed the analysis he has provided for us today. As you can see from the rundown he gave, he is definitely a veteran in the Forex industry. As I said to you all earlier, if you enjoyed his analysis and the way he tackles the markets, make sure to check out his socials and his website. All the links will be left in the description of this video. I also just want to say a massive thank you to Philip for joining us today on this week's Sunday sessions. Now, without further ado, let's jump straight into my watch list and the pairs that I am looking at trading this coming week. Okay, so you'll see on screen, we are looking at the XAU USD market first. This is a market that I have been trading quite frequently as of recent, and we have had great success with the positions we have placed. We placed 2 sell positions last week, quite early on in the week as well, and we managed to capitalize quite handsomely. What we did is we took multiple partials throughout the position and then moved our stop loss to entry. So when we saw price trail up higher, taking us above our entry point and our stop loss, we actually got closed out at break even, meaning that we banked profits from our partials and alleviated any risk from our position. Now, what are my thoughts for the coming week, and how do I want to tackle this market moving forward? Well, I am still looking for sell positions in the XAU USD market. I do feel that this is still a bearish market, and we have had recently a penetration of a higher time frame point of interest and been delivered with confirmation of bearishness. So that tells me that this corrective wave that has taken place here has finished, and we are now seeing the start of its next impulsive wave. That is what I'm led to believe, and that is what I'm wanting to see moving forward this week. What I have done is I've gone down on timeframes, looked at the fractal structure of this market. I've highlighted a last buy to sell region here from the initial impulsive wave that broke the structure to the downside. We have now seen price correct itself, taking it higher into the market, tapping into this fractal point of interest of mine. Now I want to see another break of structure after us having a penetration of this fractal point of interest. So I can actually highlight this as the last protected low. We want to see price break below this. Once we have been delivered with that, we can then look for some kind of pullback into another point of interest where we will then look to actually execute our positions. Why do we want to wait for a break of structure and a pullback? Because that would then give us the confluence and the confirmation that this corrective wave into this point of interest has finished and the next impulsive wave is ready to take place. What we can do is go down to the 1 minute time frame and look again for any kind of supply zones that may be of interest to us. I can already see this as a candle that we could look to place sell positions from, assuming we are delivered with that pullback after the initial break of structure. So I'm going to highlight this as a point of interest. Highlight it for yourself. These are the coordinates on the right hand side, so anywhere between 1754.58 and 1754.95. so we've got a 5-6 pip buffer there on where price could trail into before ultimately delivering us with that next impulsive wave lower. So I'm going to set my alert as well, and hopefully we can see price trail into this and we can look to get introduced into this market on those sell positions. Moving over to AUD USD, this is another market that I am looking to capitalize on both buys and sells this coming week. I did last Sunday give my analysis for this market, saying that we should look to buy from either this zone or this zone. As we can see, price has played out perfectly. What I will do is show you a clip from last Sunday session's video just to show that I did actually highlight these zones out for you there and how price has evidently played out as we predicted. As you can see on screen, we have the AUD USD market. I've highlighted two potential buy zones. These hold validity because they are last sell to buy regions, so they are both holding plenty of demand in the market. Now, upon price falling into these regions, we should see a lot of demand being put in, which should essentially reverse the direction of the market, trading us higher into our higher time frame points of interest. As you can see from that clip, we caught this move perfectly, and I think as of now it is running, let's have a look, 135 pips, and we had a 40 pip stop loss. So that has given us a lovely risk to reward return so far of a 1 to 3. If you're risking 1%, you're looking at 3% returns. If you're risking 2%, that's obviously 6% returns from this position already. I'm wanting to see this bullishness continue into our higher time frame point of interest, where we will then be delivered with higher time frame confluence and confirmation that this bullish corrective wave has finished and the next higher time frame impulsive wave is ready to take place. We will be delivered with this confirmation via breaks of structure, as well as candlestick formations and candlestick patterns as well. So this week we could potentially look for smaller buy positions, just trailing us into this zone. We've got 108 pips there that we can look to capitalize on. And then as soon as price has penetrated this zone, I will be closing those buys and waiting for the confirmation that price is ready to take a move lower. So my longer term bias is to be a seller in this market, as this is a bearish market. Again, if you guys want to mark out this zone for yourself, if you haven't done already, by all means pause this video, take note of this zone and get it marked out on your own charts. Okay, now moving over to the Euro USD market, very similar situation. If we just go down to the day time frame, we can see how this has been very much a bearish market as of recently. We have seen a lot of bearishness being introduced. What we are seeing now is actually price trailing higher. Now, after doing a full rundown on this market just before I recorded this video, it did actually manage to find a demand zone here. So I'm kind of thinking that potentially price could have cleared any inefficiency above that, tapped this zone ever so slightly, and has now had enough demand introduced to actually displace price altogether, and we actually may see a continuation in bullishness. So we need to be careful. What I do want to see realistically is for price to start trading lower. If we are delivered that from this POI that I've got highlighted here, perfect. We can look to get introduced in those sell positions. Alternatively, if we see price starting to trade higher than this zone, that would tell me that enough demand was introduced into this market, and we can then look to actually buy into this. And then we can look within this initial impulsive wave for any demand zones that we can look to actually place positions from. Because realistically, with these being structural highs, we have actually seen a break in those. This could just be to grab supply from here in order to push price lower. So it will be interesting to see how this market plays out this coming week. So if I'm being completely honest with you, my bias is undecided at the moment with this market, but we understand that we can take advantage of this market moving forward, assuming we are delivered with the right confirmation to do so. I feel in order for me to be confident, I would want to see a break in this previous structural low here in order to look for those sells. Alternatively, if we were looking for buy positions, we just want to see a break in the highs that have been set and for price to start trading higher than this zone that we have marked out here. Now headed over to the US oil. This isn't a market that I usually analyze, I'll be completely honest with you, but a client of ours, Dewan, he wanted me to do some analysis on this market for us this weekend. So looking at this market on the day time frame, we can evidently see that this is a bullish market. Just by looking at it, we can see how price started down here and it's currently up here. So that tells me that this market is bullish, right? So realistically, we should be looking for buy positions. Now zooming into this market and looking at the data that is presented to us, I have managed to find a demand zone here, which I would like to see price trail into before taking us higher into this market. So what we are seeing at the moment, what I feel we are seeing at the moment is a corrective wave being put in before its next initial impulse. So we can absolutely look to get involved in sell positions before longer term buys. All we need to do is look at the current structure of this market and try and find supply zones and last buy to sell candles for us to get refined entries. So as we can see, I have set a path out. We have a last buy to sell candle here. I'd love to see price trail up into this region. So we're looking at around 80 to 82 a barrel. Once we see price trail into this, I would then love to see some kind of rejection. We can then look at the fractal time frame, so 15 and 5 minute, for some kind of fractal confirmation that price has finished this correction and is ready to take its next impulse lower. Then we can have our take profit target set around this demand zone. We can then look to close those positions, and then once we are delivered with a break of structure to the upside, we have been delivered with a pullback, we can then look to get involved in those buy positions. This is the zone we can look to potentially sell from, assuming we are delivered with the confluence and confirmation we need in order to actually execute those sells, okay? So that is going to conclude my analysis for this Sunday sessions video. I hope you guys have enjoyed. I didn't want to leave this video too long, so I thought I'd just be quick and short and sweet with my points, give you some zones to look out for, and then I can pass you over to James. So that's exactly what I've done. So as I say, I hope you've enjoyed. I hope you've enjoyed my analysis and Philip's analysis. What I'm going to do now is pass you over to James, and he is going to run over some of the pairs that he is looking at trading this week and give you his rundowns as well. Don't forget to leave this video a thumbs up if you have enjoyed everything so far. Now, without further ado, I'll pass you over to James.
And for me today, I'm going to be starting off on the Australian dollar to the US dollar market. Now, anybody who is involved in my VIP chat knows I've been looking at this market a lot in the last trading week because I believe it's been delivering me with some pretty nice price action and pretty nice tradable structure where we can potentially have managed many positions. So I've been doing a lot of following this market, a lot of back testing when I can't follow it. And honestly, the amount of positions that have been available to take in this market in the past week, 2 weeks is crazy. So the first thing I do every single week whenever I come to analyze a market, and something I want to ensure that I pretty much instill in most people, is a case of remind yourself of your story, remind yourself of the higher time frame bias, always remember the bigger picture. So let's just have a very quick recap of what's going on here. So we're seeing this as a bearish impulse, bullish correctional wave, which has come to tap into a point of interest. We've had the reversal, creation of a new bearish impulse. Now, we understand that a bearish impulse is also representing an entire downtrend within itself. So we look inside of the most recent phase of that downtrend being this 1 week impulse. We've seen the 1 week impulse trade higher, tap into a POI within itself. We've seen the reversal and creation of a new downtrend more fractally. So Again, we can look inside of that downtrend more fractally, pick out the most recent phase of the overall downtrend, which represents a 1-day impulse. Okay, so looking inside of this as the 1-day impulse, we have a clear buy to sell region, which represents an unmitigated order, which we are expecting the mitigation of and reversal of the market from, which will hopefully present some nice selling opportunities, some nice positions we can hold onto longer term, which is why on a lower time frame I've been following the bullishness of the correctional wave that is trading us higher, because A, I want to be able to profit from buy positions in the short term to trade price towards this region, but also B, because I want to know exactly when price is approaching this box and getting ready to reverse. So what we can see inside of this is we have the 4-hour bullish impulse. We have a clear zone in this region which we have identified. We've then seen price tap into this. Now, whether you refine the zone like I did, or we can see, for example, on a 4-hour, we would have taken this overall candle. So either way, we would have had a tap of that zone. Anyway, going lower, we've seen price tap into the region, liquidity built, high volume clearance of liquidity, breaker structure higher, test of a demand zone showing signs that demand is now in control. We then had continuations higher, plenty of entry opportunity for buys within this region. And then now we're laying at this point in the market where we seem to have lost steam. As a result, I think a pullback is due, hoping that pullback falls into one of these two zones that I have identified, which represent unmitigated orders, which I'm hoping the mitigation of from the pullback will introduce enough supply to cause the reversal, the move higher, and push price up into this supply zone where we can then begin looking for sales longer term. Now, as I stated, this market has been very, very good for positions. We see many, many reactions, even on the downside as we were trading down, many opportunities for sell positions. And then as we reversed here, many opportunities again then for buys. So what we can do at this point, simply just have our alerts set at these demand zones, wait for price to reverse lower, get involved and look to ride that up before getting longer term sales. Okay, so now looking at XAU USD or the gold. Again, remind ourselves of that higher time frame bias where we've had a clear downtrend. Looking inside of the most recent part of that downtrend, obviously that represents this as an impulse. Quite a clear point of interest inside of this, which we can see pretty clearly now on the 1 day, a very obvious buy to sell. Now, what's happened is we've obviously had the creation or formation of a correctional wave, and where we see that this bullishness has traded us up, tapped us into that buy to sell zone, where on the lower time frames we can see quite a clear distribution in this region where we've seen volume and volatility start to curve off slightly in the market. So we knew that as we were approaching, price was very hesitant to move higher, at which case we knew that a reversal was probably due, and we could obviously pair that with the fact that we've had the mitigation of the order. From there, we've then seen price trade down. We have left a couple of orders over in the market. We see a recent tap into one of them. We've had some nice liquidity built up, liquidation of that zone of high volume, breaker structure lower. So the two things I'm thinking are likely as of right now is price tapping into this region. We get the mitigation, we get the reversal lower, finding sell opportunities to ride price down, or we need to deliver a slightly larger correction, in which case we would look to target this zone, see the reversal, and then again see that move lower. Now, the reason why it's important to have an overall story is because from that story we've created, we understand that longer term, from our top-down analysis, price should eventually be looking to exceed this current target in the market. So as we get involved in those sales, even though we will partial along the way, we can still look to hold a very small portion of that position all the way down to the current target, where we can look to hold that small portion for weeks, if not months to come, looking to profit longer term from the overall move. So that is pretty much what we're expecting with this market. I think the final one we'll go on to is the pound yen, where we see another impulse that I have identified. In this case, we're looking at a 1 day bullish impulse. I identified 3 clear 1 day demand zones. We recently had the tap of one, looking at about 2 weeks ago now. We had the tap, we had the reversal higher. We see we even delivered the breaker structure, and prices continued trading higher. and I've just identified any regions in the market that remain unmitigated as prices continued along with that trend. Now, we were involved in a position on this, I believe, just over a week ago, somewhere inside of this region. Now, unfortunately, this moved back down, came to stop us at break even, so it was just a break even trade. I was starting to express some concerns in the fact that after this major reversal, the volume and volatility as we moved away from that zone was very, very diminished, very low. You know, evident by the fact that if we look inside of here, there's not much movement. If we look at the mean movement over time, it's very, very, very shallow. You know, it is somewhat ranging, and therefore an indication that there's not too much demand present. So I was fairly hesitant as to whether or not this move was going to sustain longer term, a reversal to come and liquidate the highs. But obviously we see that since then, price has continued higher nonetheless. So I'm going to assume the demand is still definitely in control as a result of that, and is exactly why I've identified these three zones, got an alert at them, because I'm expecting that as price taps into them, we could see the reversal and potential to take buy positions from, to then trade price up to here. But longer term, we can even hold a small portion of that position up to this zone, which we've identified on the monthly time frame as a supply zone, which we can expect a potential mitigation of and reversal. So I am expecting continued bullishness all the way up to here, looking at the 179.9, 180 region. So we get involved in buys around this region. We can potentially look to hold a small position of that all the way longer term up to that 180 region, before then finding those sells to trade us all the way back down, back towards this 110 to 120 region, where we can look to profit from sales much, much longer term. So yeah, just a reminder of the zones. We can even write in the exact point within which these lay, 166.6. Okay, the one lower, we are looking at 165.7. And then finally, we have 164.08. So those are the exact three zones I'm looking for the mitigation of, potential reversal and opportunity for buys. But overall, that is going to conclude my analysis this week for the Sunday session video. Hopefully you've managed to learn a fair bit as I've gone through the markets, and also understand what it is I'm looking for, so you can potentially take that information, work it within your own bias. Make sure you are involved in the Learning Lounge, completely free group chat over on Telegram, where we do update this analysis on a regular basis. So if you are interested, make sure to get involved. Link is always in the description, just to keep up, see how things play out, and also find little tips, tricks and hints as to how we're going to look to enter and trade that market as it plays out alongside our bias. However, with that being said, thank you all for watching. Make sure to leave some feedback, and we will see you next week in the next Sunday Sessions video.